Hi, and welcome to Market Conversations. In this video, I'm going to talk about Alibaba. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Wow, another red day for Alibaba. It has been on a downtrend for almost 2 months. So earlier today, pre-market, it went to a high of 84.93 and it sold off right at the open. And this happens almost every single morning. And what will happen right before the market closes, probably an hour, 15-20 minutes before it closes, it starts to go up to attract more buyers and people who are buying call options. We can see here in the options chain, we see a lot of volume today. 26,000 volume for the 82 strike. Guess what? They all expire worthless. And then we have some for next week. 2,000 for the 83 strike, 2,000 for the 84 strike, almost 7,000 volume traded for the 90 strike. And then we have the 97 strike with almost 6,000 volume. So if you go on StockTwits, a lot of people are saying, oh, calls are so cheap. Well, what tends to happen is it goes down every single day. So it gets cheaper every day because the stock is always going down. And then guess what? They all expire worthless. See here, 85 strike, 3,000. April 21, a lot of calls for the 95 strike, 12,000. So people are expecting the stock to go to 95 or higher by April 21st. It might. Let's go ahead and take a look at the chart here. So we'll go to a 2-year daily chart. We can see back in last year, it couldn't break the 120. So we have been trading in this range of 120 and 80 for the last year. And it had gone down to a low of 58. This was last year in November. So hit high of 120 again, July. And then just recently, back in January, just cannot break that 120 resistance. A lot of people thought this stock was going to go to 200 last year. See, Alibaba is not based on fundamentals. It doesn't matter how much you think the stock is worth. There's just too much political risk. Take a look at this chart. This might be a good indication that we are hitting a bottom. So this would be known as an inverse head and shoulders. Inverse head and shoulders, what the pattern means in trading. So we take a look at this chart, shoulder, head, and shoulders. Similar to Alibaba, shoulders, head, and shoulders. Here, it says investors typically enter into a long position when the price rises above the resistance of the neckline. The first and third trough are considered shoulders, and the second peak forms the head. A move above the resistance, also known as the neckline, is used as a signal of a sharp move higher. Many traders watch for a large spike in volume to confirm the validity of the breakouts. This pattern is the opposite of the popular head and shoulders pattern, but it's used to predict shifts in a downtrend rather than an uptrend. So let me know in the comments if you think we're at the bottom. And also, if we take a look at this daily RSI, it's currently at 24. It is extremely oversold, but as I said before, this can keep going down. We have seen that back in October, hit a low of 58. And then you can see back in last year, actually, around this time frame, that it went to an RSI of 21. And then before that, 20 and 20. So you know that Alibaba can become extremely oversold time after time again. And I think this is the 8th week that it's been red. So count this. 1, 2, 3, 4, 5, 6, 7, 8 weeks. I don't know how many more weeks this could be red, but you just never know with Chinese stocks, especially Alibaba has been the weakest of them all. Baidu has been up for the last couple of days, and it stays green. So if you take a look at these options, people are buying call options every single day. And I know they're not making money because Alibaba has been on a decline, has been selling off for months, 2 months now. You see that people bought the 82 call, 26,000 volume traded, all became worthless. And even for the next week, we have a lot. We have 83, almost 3,000. And then we have the 90 strike. So we have 6,900 people that bought the 90 strike calls. And these are going for $37. They seem pretty cheap. And people do buy a lot of these calls. But if it doesn't go to 90 or higher, they're just going to become worthless. So the best thing to do is, if you're planning to buy Alibaba, I would suggest just buying common shares, just because there's no expiration dates. So when a stock goes down, at least you can just hold on and dollar cost average, or you can consider buying leaps. So let's take a look at that. They're long dated call options. We have the December 2024. So the 100 strike calls are going for $1,500. They're pretty expensive. Another strategy that you can do is a cash secure put. So if you're planning to buy 100 shares, you can just sell, let's see, for April 21, you can sell an 80 strike put. So we're not buying a put, we're selling a put, and then you receive this $380 premium, which lowers your cost average. So I don't know, I lost quite a bit of money in Alibaba the last 2 years. And yeah, I wish I can get in right now. This is a pretty decent price, but I lost all my money here. This is just an ugly chart. And hopefully in the future, it can try to break and stay above this very strong resistance. So let me know in the comments what you think. Are you buying more Alibaba shares? And thanks for watching.